Wait, before you pay another dollar in vehicle taxes, you need to watch this. The government just quietly released new exemption rules for 2026, and if you're a retiree or pensioner, this could put hundreds, maybe thousands of dollars back in your pocket starting this year. Here's what's shocking. Most people who qualify for this break have absolutely no idea it exists, and the ones who do find out, they're kicking themselves for not knowing sooner. We're talking about a brand new vehicle tax exemption specifically designed for retirees and pension recipients, covering everything from registration fees to personal property taxes on your vehicle. The income thresholds, age requirements, and vehicle eligibility rules have all just been updated for 2026, and the window to take advantage of this is right now. Whether you're driving a paid-off sedan, a pickup truck, or even an RV, this exemption could apply to you. And the application process? Simpler than you'd think. In the next few minutes, I'm going to break down exactly who qualifies, what documents you'll need, the deadlines you cannot miss, and the one critical mistake retirees are making that's costing them the exemption entirely. This is the kind of information your financial advisor probably hasn't even told you about yet. If you know a retiree or pensioner who deserves to keep more of their hard-earned money, smash that like button right now so this reaches them before it's too late. Now let's get into exactly what this exemption is, who it covers, and most importantly, how you make sure you're not leaving money on the table this year. So here's where we need to start, with a little bit of context, because understanding why this exemption exists in 2026 actually makes the whole thing a lot easier to understand and a lot easier to act on. Over the past several years, lawmakers and state legislators across the country have been under enormous pressure from advocacy groups representing retired Americans and pension recipients. The argument they've been making is simple and it's hard to argue against. Retirees and pensioners are living on fixed incomes. They're not getting raises, they're not getting bonuses. Every single year, the cost of living goes up, and every single year, their income stays essentially the same, or in some cases, barely keeps pace. Vehicle ownership costs have exploded. Insurance is up, maintenance is up, fuel is up, and on top of all of that, retirees have still been required to pay the same vehicle-related taxes and fees as working adults with full salaries. That has finally started to change in a meaningful way, and 2026 is the year where we're seeing the most significant shift yet. The 2026 vehicle tax exemption rules that have just been released are part of a broader effort to reduce the financial burden on retired Americans who depend on their vehicles for independence, medical appointments, grocery runs, and staying connected to family and community. For a lot of retirees, a car isn't a luxury, it's a lifeline, and policymakers are starting to treat it that way. What this means in practical terms is that eligible retirees and pensioners may now qualify for full or partial exemptions on vehicle personal property taxes, annual registration fees, and in some states excise taxes tied to vehicle ownership. The exact benefit you receive depends on where you live, your income level, your age, and the type of vehicle you own, and we're going to walk through all of that step by step so you know exactly where you stand. Let's talk about who qualifies first, because this is where a lot of people get confused or assume they don't qualify when they actually do. The general federal framework for the 2026 exemption establishes a baseline eligibility standard that states can then expand upon. At the federal level, you need to be receiving some form of qualifying retirement income. That includes Social Security retirement benefits, pension payments from a government or private employer, railroad retirement benefits, or income from a qualified retirement account like an IRA or 401k that you are now drawing from. If you are receiving any one of those income sources, you are potentially in the eligibility pool. That's an enormous portion of the retired American population, which is why this is such a significant development. From there, the age requirement kicks in. The baseline federal guidance sets the qualifying age at 62 and older, which aligns with the early Social Security eligibility age. However, many states have chosen to set their threshold even lower for certain categories of disability-related retirees, and a number of states have extended benefits to surviving spouses of qualifying retirees as well. So if you're a widow or widower of a retired veteran or pension recipient, don't assume you're automatically excluded. you may be covered under your state's expanded provisions, and it's absolutely worth checking. Now here's where income thresholds become critically important, and this is the part that trips people up more than anything else. The exemption is means tested in most jurisdictions. What that means is there is an income ceiling above which you would not qualify for the full exemption, though you may still qualify for a partial one. For 2026, the federal guidance suggests a full exemption threshold of $45,000 in annual gross retirement income for a single filer and $60,000 for a married couple filing jointly. These numbers represent a significant increase over previous years, which is great news because it brings more retirees into the fully exempt category than ever before. Above those thresholds, partial exemptions may still apply on a sliding scale, and those partial exemptions are nothing to dismiss. Even a 30 or 40% reduction in your vehicle tax burden adds up meaningfully over time. The type of vehicle you own also matters here, and this is something you need to pay close attention to. The exemption as currently structured applies to passenger vehicles, meaning standard cars, trucks, vans, and SUVs used for personal transportation. It also covers motorcycles in most states, and, importantly, it covers adapted vehicles that have been modified for disability access. What is generally not covered are commercial vehicles, vehicles used primarily for business purposes, or vehicles that are registered under a business entity rather than your personal name. If you have a vehicle registered to an LLC or a small business, that vehicle would not qualify even if you personally are an eligible retiree. The key word here is personal use, personally registered vehicles. For most retirees, this is exactly what they have, so the vast majority of people watching this right now will find that their primary vehicle checks that box just fine. Let's shift now to the actual dollar amounts, because I know that's what you really want to understand. How much money are we actually talking about? The answer varies significantly by state, which is why it's hard to give a single number that applies to everyone. But let me give you some realistic ranges to put this in perspective. In states with high vehicle personal property taxes, like Virginia, Missouri, and Connecticut, retirees who qualify for the full exemption could be saving anywhere from $400 to over $1,200 per year, depending on the value of their vehicle. In states with lower baseline taxes but significant registration fee structures, the savings tend to fall in the $150 to $500 range annually. Even at the lower end of that spectrum, we're talking about real money, money that could cover a utility bill, a medication copay, or a tank of gas every single month. Over a 5 or 10-year retirement, these savings compound into something genuinely significant. Now, let's get into the application process, because knowing you qualify is only half the battle. The other half is actually getting the exemption applied to your account so you're not paying taxes you don't owe. The good news is that for most states, the process is far simpler than people expect. It does not require a lawyer, it does not require a financial advisor, and in most cases, it does not require you to go anywhere in person if you'd prefer not to. Here is the general process that applies in the majority of jurisdictions. You'll start by gathering your documentation, and there are typically 3 categories of documents you need to have ready. First, proof of age, a driver's license, passport, or birth certificate will work. Second, proof of qualifying retirement income. This is usually satisfied by your most recent Social Security award letter, pension statement, or a copy of your prior year tax return showing your retirement income. And third, proof of vehicle ownership. Your current vehicle registration certificate covers this. With those documents in hand, you'll either submit an application through your state's Department of Revenue website, your county tax assessor's office, or in some states, through the DMV directly. Many states have now launched dedicated online portals specifically for this purpose, and the application process can take as little as 15 minutes if you have your documents ready. Once approved, the exemption is typically applied automatically going forward, meaning you won't need to reapply every year as long as your eligibility status doesn't change. That's an important detail. Once you get it set up, it stays in place. But you do need to set it up first, and that's where millions of eligible retirees are currently dropping the ball simply because they don't know it's available. One thing I want to spend a moment on is the deadline issue, because this genuinely matters, and it costs people money every single year. Most states have a specific window during which you must submit your exemption application in order for it to take effect for the current tax year. In many states, that window aligns with the vehicle registration renewal period or the annual property tax assessment cycle. If you miss the window, you don't lose the exemption forever, but you do miss the benefit for that year and will have to wait until the next cycle. For 2026, many states have application windows that open in January and close anywhere from March through June. Given that we're already into the year, time is genuinely of the essence here. I'd encourage you to look up your specific state's deadline within the next day or two, not next week, not next month, because the people who act quickly are the ones who actually capture the full benefit this year. Now, there's a critical mistake I promised to tell you about, and here it is. The single biggest error retirees are making with this exemption is assuming that it has already been applied to their account automatically. It has not. Unlike some senior discounts or Social Security adjustments that get applied based on information the government already has, this vehicle tax exemption requires you to actively apply. The government does not automatically cross-reference your retirement status with your vehicle registration records and reduce your tax bill on your behalf. You have to take the initiative, and because this isn't something that gets widely advertised, you won't see a billboard about it, you probably won't get a letter in the mail about it. The burden falls entirely on individual retirees to go find it and claim it. That's frustrating, but it's the reality. And now that you know, you're already ahead of most people. There's another dimension to this that's worth discussing, and that's the combined effect of stacking this exemption with other senior-related tax relief programs. In many states, the vehicle tax exemption can be combined with a homestead property tax exemption, a state income tax exemption on Social Security income, and various utility assistance programs. When you start adding all of these up together, the total annual savings for an eligible retiree can climb well into the thousands of dollars. Tax planning for retirees is often thought of as complicated and only for people with investment portfolios, but the reality is that some of the most valuable tax benefits available to retired Americans are these simpler, practical exemptions on everyday expenses like your home and your vehicle. They don't require a financial advisor to claim. They just require awareness and a willingness to take action. I also want to address the retirees out there who have older vehicles or lower value cars. Some people assume that because their car isn't worth very much, the tax break probably isn't worth pursuing. That thinking misses the point. The exemption in many states is applied as a flat fee reduction or a full waiver of the registration fee, regardless of vehicle value. So if your state charges a flat $85 registration fee and you qualify for a full exemption, you're saving $85 every year simply by submitting a one-time application. Multiply that by the years remaining in your retirement, and it's money you simply shouldn't be leaving behind. For our viewers who are not yet retired but have parents or grandparents who are, please do them the favor of sharing this information. Print it out if you need to. Sit down with them and help them look up their state's specific exemption program. Many older retirees are not comfortable navigating government websites on their own, and having a family member help them through the application process can make all the difference. This is one of those situations where a 20-minute conversation could save someone hundreds of dollars a year for the rest of their life. That's a conversation worth having. And finally, for everyone watching, the landscape of tax relief available to retirees is constantly evolving. 2026 is shaping up to be one of the most favorable years we've seen in terms of new exemptions and expansions of existing programs. The vehicle tax break is one piece of a larger puzzle, and we're going to keep covering these developments on this channel as they happen. If you want to make sure you don't miss any of these updates, because trust me, there are more coming, make sure you're subscribed and have notifications turned on, because the next exemption announcement could be just as significant as this one, and you'll want to know about it the moment it drops. This is your retirement. You worked for it, you earned it, and you deserve every benefit that's available to you. Don't let bureaucracy or a lack of information cost you money you're legally entitled to keep. Go check your state's exemption program today, gather your documents, submit your application, and lock in your savings for 2026. You've got everything you need to do it, and now you've got no reason not to.